GM, welcome to Morning Markets. It is Wednesday, the 8th of October. So, lots of volatility yesterday. Is it all over? Well, let's dive into it. Starting with the high time frame Bitcoin chart. Clear support resistance levels we've seen all cycle when Bitcoin flips them, finds them as support, and pushes higher. Flips, support, push higher. And again, that's what we've been attempting here. So we've attempted to flip it, failed so far, so swept it on the weekly. And now we just need to see it close above this support resistance level so we can flip it as we have time and time again. The reason I'm showing you this is because Bitcoin market is not going to fool you guys. It's not going to trick you. Look at all the breakouts. So this breakout over here, clear impulse above it, and then you consolidate above resistance. That's bullish. That leads to higher because price is accepting at higher levels, which leads to the markets going higher to find a willing seller, because that's what markets do. They're here to facilitate trade. So they'll go up to find a seller and they'll go down to find a buyer, wherever that may be. So when you break out above resistance and consolidate, that is accumulation and leads to continuation higher. Very simple. Again, 2024, this was after the ETF's launch, so 50K, we flipped the level, consolidated, led to a move higher. Even back here, you can take this level, 31K, flipped it, didn't even give a retest, so super strong on this one, where we just consolidated higher and higher and higher in an accumulation cylinder. So very bullish. That's what it looks like, and that's why it leads to continuation. So what have we seen on Bitcoin? Well, it's not been that yet, and that is what you want to look for, because we've marginally closed above, but with lots of wicks, unable to close above Sunday's high. Since then, we've flushed down, so there's no sign of the markup yet. Bitcoin needs to consolidate now at best, if not bleed lower. And the invalidation for that is simple. You just need to now reclaim resistance and have a markup, ideally above the new all-time high over here. Close above there, convincingly, any consolidation leads to a move higher. And from there, you can trade a nice momentum move, which I believe will be quick between 127 to 130K if you do get that scenario where we can convincingly flip it, have some consolidation, then there's a nice day trade, potential swing trade in there, which I would expect to be a fast move. But that's not what we've seen yet. We've seen, of course, the opposite. Price has rejected this level, so now we just need to see, can support be found here? Can we consolidate, or are we going to bleed lower? And it's very simple as to why Bitcoin has done this, guys. I mentioned in my video yesterday in the weekly outlook, time and time again, you don't get Bitcoin breakouts while Bitcoin dominance is showing weakness. And well, these were the levels on Bitcoin dominance that I mentioned. It needs to flip. So this is a September high and September low. So far, we tried to push above it, rejected, and look at that. Bitcoin also rejected the breakout. Because traders are shifting their attention to altcoins exactly when Bitcoin is trying to break out. That leads to capital flowing elsewhere rather than where it needs to flow into the breakout to actually lead to a markup higher. So that's why you saw the breakout fail, is because Bitcoin dominance fell off and you saw Ethereum outperform and you saw many altcoins outperform. Whereas what you need is something like this where Bitcoin's actually breaking higher, and that leads to your lovely rallies. So look at this. You've got Bitcoin pushing higher, and that leads to the markup. And we can show many examples where Bitcoin, again here, beautiful rally from 75 all the way to 112K. And that was with Bitcoin dominance rising, rising, and rising. So that's what we need to see. Need to see it show some strength here. Again, while it's not breaking down, so it's not totally bearish, if you will, even though, of course, this isn't a chart you can trade, it is still holding up. It just needs to show some strength and actually continue rising to show inflows are coming into Bitcoin and supporting a potential breakout. But as I mentioned in the weekly outlook on Sunday, it's probably going to be difficult for that to happen. Often Bitcoin dominance rises off Bitcoin dumping because it's the lower volatile asset compared to altcoins. It goes down less than altcoins. That means this chart rises. And it's harder for Bitcoin to rise more than altcoins, which also can lead to Bitcoin dominance rising, barring a catalyst. And we've had so many catalysts this cycle already on Bitcoin, with ETFs, with strategic Bitcoin reserves, all the Bitcoin vehicle companies. It's almost exhausted of catalysts, something I've talked about for a while now. Bitcoin is absence of a bullish catalyst, but it's also absence of a bearish catalyst. So that's why you get this ranging price action, and other assets like gold have been taking over. So when you look at gold, what are we seeing? Again, gold just continues to mark up, and it's not allowing Bitcoin to break out. Another chart I mentioned to watch is one of your signals to see if this breakout's going to hold. And while gold, new high every day, that continues even this morning, Wednesday. Asians are bidding. We know China, they are a big buyer of gold. So they have a catalyst. They have an entire country, the second biggest country in the world, continually buying gold, whereas Bitcoin doesn't necessarily have that. At least not, it's not clear yet that the US or any other countries are buying consistently. Potentially that's going to change in the future, and that can be the next catalyst. I know Cynthia Lummis is always talking about that, but yet to see that actually come to fruition. Strategic Bitcoin reserves so far, nothing's come from it, and there isn't a plan for the US to accumulate. So that's when you see the assets where you actually have a country accumulating, like China accumulating gold, it's breaking out to new highs. Daily market structure remains intact, and that's leading to Bitcoin suffering because it's not allowed to have the attention and it's not getting the capital flows into it. Instead, other assets are being favored, like gold. And that's going to continue until gold stops and gold consolidates. Then Bitcoin can take over. If you see gold close here today, then fully revert the next day, well, that's a sign that leads to some sort of chop where Bitcoin can outperform in that period. But until then, until you see a candle on gold get fully mean reverted, and by that I mean something like this, where the next day you come up and you immediately retrace the previous day's candle, the previous day's impulse. That is weakness, as it shows the breakout buyers are not supporting price, and that can lead to consolidation, bullish for Bitcoin. Reason that's bullish for Bitcoin is this chart over here. So you've got Bitcoin against gold, which again failed to break its September high that I mentioned in the weekly outlook. That's what led to this breakout failing, because gold is outperforming Bitcoin. So you need to see this chart start to break the September high rather than break the September low. And of course, breaking the September low would lead to a further breakdown, I'd imagine, on Bitcoin as it suffers again from lack of attention. And well, what did we see? I will get to the lower timeframes in a second, but just want to continue on the higher timeframes for now, guys, because it is very interesting what we saw. So when we look at the ETF inflows yesterday, so we got 875 billion on Bitcoin. That fell from the day before of 1.2 billion. Whereas Ethereum, you actually saw 420 billion, which rose from the day before of 176 billion. So it's all about rate of change, guys. That's what matters in the market, not the numbers itself. So ETF decided to bid Ethereum harder than Bitcoin yesterday, while Bitcoin was trying to break out. That again is a signal that they are looking to rotate their profits on Bitcoin into higher risk assets rather than letting Bitcoin run and rotate from higher. We've seen it time and time again when ETH starts to outperform, when Solana starts to outperform, these altcoins outperform, that is when you get closer to the later stage in the whatever rally it is, whether it's a 4-hour rally, a 1-hour rally, or a daily rally. So when you start to get that ETH outperformance, and you're seeing it through ETFs and price. So ETH, when we look at the daily, was coming up, making a new high on Monday, whereas Bitcoin on the daily couldn't make a new high on Monday. We couldn't close above Sunday's high. So that's where you saw the ETH outperformance on the day Bitcoin was trying to break out, which leads to this chart, of course, turning and flushing. So very interesting to see the rotations, and looks like Bitcoin seriously needs to be favored here. So keep an eye on your altcoins and Bitcoin. And it was really simple. I mentioned in yesterday's morning markets video, you've got these full-bodied candles. These are bullish. These lead to continuation. But then you start to get these big wicks. You start to get these big wicks, and that means sellers are showing up. They're willing to sell there. And you get in these big wicks during periods where the ETFs are pouring in 1.2 billion inflows. So if 1.2 billion inflows can't lead to the full-bodied candles that we've seen previously, that means it's being absorbed. And while that's okay if we find support here and can consolidate, that's why the breakout fails. You need to see, of course, these full-bodied candles, like we see in every breakout. It's big full-bodied candles. Consolidation leads to markup continuation. Not this, where we see the wicks. But as I mentioned, it was expected to see resistance come here because we've been up only. We haven't built a base on Bitcoin, and that leads to FOMO. That leads to chasing, and that leads to leverage, of course, needing to be flushed out. Took out the shorts, took out the liquidity there, and now some longs have been flushed over here, and that's perfectly normal. Now we need to take a look at the lower time frames and see what we can actually expect on Bitcoin. So back to this chart over here. We have some levels on Bitcoin where 120K, we've hit that, so that can potentially be the level to hold, and we have some paths here. So orange path seems to be the one that's playing out. Of course, we do have the potential for the red path now, since we have got some high volatility here. So in the weekly outlook, I mentioned now, I'm looking at the reaction at all-time high here. Is it highly volatile, which would be more indicative of distribution? As you can see, you pump up here, then you immediately retrace it all. That's volatility. That's what leads to flip-flop. And flip-flop generates exit liquidity for smart money. Look at all of these periods over here. What is this? You have huge swings where you have big pump up, take liquidity, big dump down to 90K, but then immediately comes back in the same day to 102. And you get a dump from 100 all the way to 80, then retracement a few days later back up to 95. That is high volatility. That leads to traders getting bullish at the top, thinking we're so back because you had a huge green day. Everyone gets excited. Everyone on Twitter and your favorite influencer is shilling a bunch of projects saying you're not bullish enough, saying I bought the dip. Haha, look at me. Even though they have no proof and they were bearish at the lows here when we were dumping at 80K. That creates exit liquidity because you've got a bunch of traders flip-flopping, selling, buying, getting liquidated. That is perfect for whales to fill their sell orders. Remember, whales sell when they can, not when they want to. So what are we seeing? Well, this is a volatile day. We have retraced Monday, Sunday, Saturday, and a portion of Friday, all in Tuesday's candles. So this is where you need to see support come in now. At 120K level, which we're currently seeing a bid. And of course, it can go as low as 119.9K. That is the value area high of this distribution volume profile over here. So that's what I'd be looking for. Can we now consolidate? Let's move this path to the side for now and form something like this orange path over here where we chop, hold 120. So yes, sellers have been met here. That's fine. We've been up only. It's natural. Now we just need to see our demand. Our buyers going to show up here. And if they can't show up at 119.9, then I'll be looking at the POC. Let's move this out of the way for now. I'll be looking at the POC as interim support 1. I'll be looking at interim support 2 at the value area high to value area low of these two volume profiles here. So that's between 115 to roughly 116.5K. And the POC is at 118K. You'll be looking for any dips to form a higher low around these support levels. And of course, Worst case scenario, you have the high time frame support resistance, but I think that would be more bearish to fully retrace this rally. I'd imagine is more likely to actually lead to lower if we do have to come all the way down there. So you're really just looking at, can we find support at 120? Can we find support at the POC at 118? Or can we find support at this interim support too, 114.8 to 116.5? They would all form a higher low, and that can allow the rally to continue and would build a base. So wouldn't be terrible to see that. It would have a lot of people flip-flopping, because if you see price dump down to there, people are going to be calling this a top, triple top, which it may well be. Therefore, you're creating higher lows in an area where everyone gets bullish at support in this scenario. So could see that for sure. And again, that can be from higher, doesn't have to be from there. 120 is still the level to hold. It hasn't broken yet. Therefore, that's what I'm expecting in the bullish scenario. You now just want to see consolidation. Price be able to accept and digest the move here. Flip the sellers, flip the weak hands into strong hands. Failing that, of course, if we do continue flushing lower, then watch for 119.9k, that 120k level to break. That can potentially lead to a flush. And really, you're just looking at Friday's candle. You know, you don't want to take Friday's candle, especially not today. That is then extreme volatility, because you're just retracing all of these good gains. All of those huge inflows from ETFs are just getting immediately met with sellers, which leads to continuation lower typically. So it's all about the nature of price action. Can we hold slowly up here and consolidate? Or even if we go down to the POC or down to these lower levels, it's how it gets there. Is it a slow grind lower? Now, of course, looks something like this. Can we just digest the move slowly before we build the higher low? Or if we came down like this, that's more bearish. So it's price can go to the same level, but it's how it goes to that level which can dictate whether it's bearish or bullish. Because that shows whether sellers are easily pushing price down or whether they are not easily pushing price down. So I'll be watching Friday's low carefully if we do lose. Of course, 119.9k, but any consolidation between 119.9 to 124.5 sets up for a bullish range. Below there, you have to look at how is price moving lower. Is it moving lower in a bullish fashion where we're going to build a higher low? Or is it moving lower in a bearish fashion where it's an immediate retrace down? So that's what I'll be looking at. Lower time frames now. 1 hour chart. What did I say yesterday? Break today's low, so Tuesday's low at the time when I recorded the video. It's going to lead to a flush lower. You're going to take out this lows, and longs are under pressure. And well, that's exactly what happened. Mapped out this path where if you take the low, that's going to lead to lower, in my opinion, which is exactly what played out. Again, guys, you enjoying these videos, please drop a subscribe. Let's get me to 200 subscribers. Again, you never know how long I'm going to be around in all these places. So make sure you're in touch with my YouTube. You have it in your contacts. And if you want more of these calls, you want valuable content from a real trader in the markets on YouTube, make sure you hit like, hit subscribe, hit a comment, because I don't produce these videos for the algorithm. They're very boring. They're very technical focused. Therefore, if you guys show that appreciation, it helps me out a bunch. So this path has played out beautifully from yesterday's morning markets. You can go watch that again. Took the low, and that led to a flush to take this liquidity, and really has now, on the 4 hour chart, broken market structure. So this was your low. This was the low that led to the high on a wick basis. We closed below it. So now the 4 hour is actually bearish until we reclaim the August all-time high. And ideally the all-time high, which we previously rejected from. So again, it's the same. Flip this level, August all-time high on a closed basis. That should lead to a test of the all-time high. And flip that. That should then lead to a markup in price discovery. And you'll see it on your daily closes, as I mentioned earlier. You'll see it with Bitcoin having a proper markup above the high. And that would be on the low time frame, something like this green path over here. Now, of course, we can reject from any of these levels. So you also have the red path where if we can't flip this level, which we haven't been able to do previously, it's been rejected with sellers, then expect something like the red path and more distribution if you see that reversal sign. And again, just looking for any of your reversal signals. So sweep, failure to return, double top. What was this? This was the sweep pattern. You can see right here, got the sweep. Now you've broken the market structure. So technically we are in a bearish reversal here on the 4 hour. I still think we can rally up, especially distribution. It tends to keep taking liquidity, and then follow something like the red path. So these are the levels to keep an eye on. You want to flip the all-time high, really hold it, consolidate above resistance as the market showed you they can do previously on breakouts. That leads to a markup move. Then boom, we trade it to 126 to 130. We can look for longs, look for that momentum if price is accepting in price discovery, because that signals strength. But until then, we're seeing the sweeps, we're seeing distribution, we're seeing sellers show up, and you then just have to see where can consolidation form, or are we going to flush lower? And right now, this is a bearish reversal on Bitcoin. So we get a fresh chart up. What are we seeing? Well, as mentioned, you've seen a sweep. You've even seen a previous sweep here. But the reason this sweep here wasn't bearish is because you didn't break the market structure over here, the 4 hour market structure. Now, the reason this one is bearish is because you have broken the 4 hour market structure. We've closed below it now after the sweep. So this is the main sweep, and that signals the sweep reversal. Now this gets invalidated if we close again, as I said, back above the sweep level, then sure, you can look at the invalidation of bearish setup being a bullish setup. But until then, we have now lost the 4 hour market structure, and you need to see where this chart can end up. Because it could flush lower, it could need to find more support levels lower. You go to something like your daily, that can lead to a flush into the daily bands over here, which I mentioned to look out for in the morning markets. It's all about time frame, guys. Been a lot of day trading conditions, but now potentially you're setting up for swing trades where you could see the daily bands actually hold as your support. You'd want to see them hold as support if we do flush into that level. So that's what I'd be watching if we do go lower. And that, of course, confluences with these support levels that I mentioned here. So watch for your daily bands. If we do go lower, can we move into them in a bullish fashion? Of course, not immediately coming into Friday's low, but in a slower moving fashion. Bounce off those levels, which are coming up to 120k now, so would be the area to hold again for that orange path. So that's what I'll be looking at in terms of BTC. 4 hour is now bearish until proven otherwise, and that would be proven again by reclaiming the sweep level. So back to the Coinbase chart. The reason we saw this 4 hour breakdown again is because volume. I mentioned all these divergences in the video. You saw volume was going lower and going lower, even with the New York sessions while price was going higher. And I said that's not bearish until we break structure. But again, now we have broken structure, and we can, to keep it consistent, let's map this out. So this is H4 market structure, which is now broken, and bearish, which we are back testing now, which now can lead to either a reversal from here. If we can push up today, then reversal from August all-time high, or last level to reverse from is the all-time high. And bullish scenario is flipping the all-time high, then we can lead to continuation. And when we look at the data, what are we seeing? Well, let's analyze this trend on Bitcoin, because there's key moments in this trend. You've got obviously open interest currently up 5.66%, and price in the same time up 9.5%. So open interest is not outpacing price. This has very much been a squeeze of shorts, a squeeze of hedges, rather than longs going crazy on the futures market. And you have seen some spot bid. So let's take a look at it. Where was spot bidding? Because we know when spot bid, that is strength. And we know when futures lead and futures take over, that typically leads to weakness and flushes. So got this green CVD, that's the spot market orders. We saw spot was outpacing perpetual futures in terms of buying pressure during this portion here. So from this low to this high, spot was outpacing the perp demand. So let's see what price was doing. So price is at the lows here to this high. Let's mark this in green. Let's mark this in green. This is your spot demand, where smart money were happy to accumulate. So that is between 108 and 112.5, those key high time frame levels from my charts over the last few weeks. Spot then began to sell. You saw perps take over for a little bit, and then spot really came back over here to here, started to outpace perps marginally, not as much as before, so not as strong, but still spot demand were happy to get involved from this period to over here. So no surprise, that's where we've whipped into so far and bouncing off. This is an area of previous spot demand. And that's why you're seeing price can actually potentially rally from this 120k level if we are going to be bullish. And that's why I say if we lose 120k, you're now just looking into the lower levels, which are 114 all the way up to that 120k level that we can find support in. So this would be the area for spot to come back and show demand, because since then spot really hasn't done much. It hasn't made a new high while you're seeing perps constantly rise higher. So people on futures have got more and more excited as the rally has gone on, whereas people on spot got less excited and they've actually been selling towards this higher end. So this was the portion of the rally where perps just absolutely took over. So here to here, you can see this was all perp led. Spot did not make new high. So this is your dangerous area, which we'll mark out here. And that is from really this low here to the high where futures took over. So we can take all that price action in this box. Spot side to sell during this period, and the market was really being propped up by longs on leverage. So anywhere in between 119 to 126, of course, you're at risk of some wicks to flush some stops. And where can these stops be? Well, stops can be over here, around that 118k level. Stops can be over here, around that 119, 120k level. And of course, you would have built up some stops this morning over here at 120.5. So I'll be watching these levels on low time frames today for any day trades to see if the sweep of them can lead to a reversal and a move higher. So you're just looking at this for your low time frame scalps today to see if we can find any decent long setups. That's what I'll be looking at in terms of trades today on the low time frames. Of course, this is outside of the high time frame analysis that I've been talking throughout this video. So any sweeps of these levels where I know stops can definitely be on the long side. And of course, you got a level over here as well around 116.7. Any sweeps and reversal, as mentioned, would actually potentially lead to a setup where we can see Bitcoin climb higher and have a decent setup. So that's what I'll be looking at in terms of Bitcoin. Leverage looks pretty fine. So this shows the margin borrow rate of borrowing USDT. And we can see when it's at a high, people are paying 40% interest rate to borrow USDT, which is of course crazy and unsustainable. And that's why it leads to the tops in the market. This was the 74K top in 2024 when leverage was super high. This was the 100K top Trump presidency rally when leverage was at 48% annualized. And so far it's 14% annualized. So you're seeing some signs of leverage coming back, but nothing crazy, which is interesting. So this is the caveat and probably your bullish hopium is that leverage isn't rising too high. Therefore, potentially, again, can see that consolidation path, which leads to Bitcoin rallying maybe later on in the coming weeks. So that's everything for BTC. When we look at Ethereum, so what have we seen on ETH? ETH tried to flip resistance, got a daily close above, but immediately rejected and even broke structure here on the daily time frame. So not great when it comes to ETH. Obviously, it was outperforming, and that outperformance, as you guys have seen all cycle, typically leads to a flush in crypto later on. And the real bad sign is that we couldn't even hit the liquidity level. Bulls couldn't even take it to 4767 to wipe out all the short stops here. It immediately flushed before getting to there and then broke the 4-hour structure. So on Ethereum, I think we can see bounces, of course. Left a big inefficient move yesterday. But overall, I'd expect this chart to now have to come back to the interim support between 4.2 to 4.3K. Now, the invalidation of that is flipping this resistance again at 4,640, which it struggled to do. Otherwise, I think any bounce in here probably gets sold into and we bleed towards the interim support. So ETH would suggest that markets do have further down to go. So when we look at Bitcoin, again, that can be any of these paths where we have a lower high bounce and then need to flush lower in the coming days. And then you're just looking, can we build a higher low at this level? And if not, can we hold the last support, the final support at that high time frame support resistance level at 4.1K if that fails? So that's what I'd be looking at on ETH. Any move lower, looking for that higher low to form at one of these support levels. And if we flip resistance before, then sure, back to bulls in momentum, we can look at these liquidity levels higher. So that's it when it comes to Ethereum. When we look at Solana quickly, we're seeing it's following my orange path. So I mentioned it's coming back into the area where bulls were trapped, and now bulls are taking that as an opportunity to sell at break even, which isn't bullish. That means they've used it to get out of their positions, which means added selling pressure. And that's leading to this compression pattern that I've talked about for a while, potentially forming here. Just need to see where the low is going to form, but looks like Sol needs to come back down. Again, looks like a lot of the market needs to come back down and really just now reaccumulate to set up a potential rally for higher. And then you're just, again, looking for your higher lows to form. Show that demand where we can build from higher levels as opposed to the previous dump in late September. So that's the structure you're looking for now. Obviously, October started off bullish. As I mentioned, you don't need to get absolutely crazy October the 1st, October the 2nd. Don't lose your minds because Q4 is a long 3 months and you're just seeing that now in October as we start to see some retracements. You're going to see a lot of pain, a lot of liquidations, a lot of people losing their minds, but you guys know better. You know what to look for from my videos, and we play it level by level and we watch to see how the market reacts. So that's Solana really. Just looking to see, can we start to form this orange path and build this compression pattern? And of course, anything above the yearly open is fine for consolidation. If we lose the yearly open, then that's bearish and sets up for lower on Sol to take out these liquidity levels. So I'm just waiting for that. And if we can break out above, of course, flip 240, then you're looking for longs up to 260 and 270. Is that showing acceptance within that trap zone that Sol has currently sold off from? So that would be a change of character on the bullish scenario and puts bulls back in momentum if we are going to rally higher on Sol. And that's the story when we look at the total market. So looking at the altcoin index, what have we seen? Well, we're still above the level which we need to remain above. So this is where bulls broke out the altcoin index chart, led to a trap and flush. So reclaiming that failed breakout level can be bullish. And you really want to see it hold above there to set up this orange path for a move higher. If we're not going to do that, then you're just looking for your weekly bands to hold as support as they have been, forming these higher lows, higher lows, higher lows. So if we do need to lose that level and go for one more flush, then you just want to see another higher low form at these bands. And that can lead to a further flush, of course, on your altcoins. And again, that's why the higher low is so important, because you want to be outperforming the index. So therefore, you don't want to see your altcoin not make a higher low and actually have a deeper retracement. So that's how to identify relative strength. Otherwise, that's what I'm looking at. Above 858 billion, we are looking good for momentum higher, but we are seeing some sweeps here, some signs of sellers showing up again at this trap zone. So if we do lose 858 billion, looking for a higher low to form on those weekly bands, really above 800 billion. That's the level that you want to see altcoins hold over here if we do have to come for another retracement lower. So that's really it when it comes to the markets. Quick look at stocks. What are we seeing? Obviously, praise around AI. One thing about the US economy, quick rant right now, is that they've got a lot of investment into AI, and that's almost propped up the stock market. We haven't seen that investment turn into sellable goods and real products yet. Of course, it takes time, which is why you've seen the dollar falling quite a lot. We've seen since Trump got inaugurated over here, dollar's been down, 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 and down, while the stock market's been up, 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 and up. And that means all the companies that have been invested into in the US, they're not yet producing goods, they're not yet marketable. And there's a lot of that, of course, is AI, so it makes sense. Otherwise, you'd probably see the dollar going up because the more a company sells, the more demand there is for dollars. Whereas if it's just investment pouring into the US, investment, and not yet products that are being sold, that can lead to what we've seen, dollar going down, dollar having weakness, but the stock market going up, 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 and up because companies are getting bought into. So it's interesting to see what's going to happen. A lot of craze around AI. I think if there is going to be a flush in the stock market, it is going to be due to some of that AI profits being taken on those plays, a lot of exit liquidity potentially generated. So while the daily 12 and 21 bands hold, it's good, expect new highs. But if we start to see the daily 12 and 21 bands lose and we start to lose 6611, now expect a further flush on the stock market to start to fill in some of these earlier levels. So be looking at something like this if we do lose that. If we hold it, then just expect new highs. And it's interesting because you've obviously got the dollar breaking out of this box that I mentioned yesterday, which is risk off. Got gold moving with it, which is interesting. Is there something potentially ahead? Some sort of conflict, some sort of war escalation coming up that's leading to this risk off move on the dollar? And of course, gold, which is a hedge against all of that and leading to that Bitcoin weakness. I'm not sure, but I'd now be watching 99. This is the breakdown level on the dollar. You want to see that reject, of course, for risk on markets to be bullish and watch for your reversal pattern. If it flips, then you could actually see more pain in the markets ahead, and that's going to lead to your deeper dips that I talked about today, where potentially we need to target that liquidity. And that could be the orange path, as it's still bearish. It's just forming that rally, which leads to the lower high bounce to take this liquidity. So I'll be watching 99.578 carefully to see if it rejects or flips, as that's going to dictate a lot of the moves in your risk on markets. Currently looking risk off. Really nice rally on the dollar from FOMC. It's going up, up, and up, and it looks like it wants to at least attempt to hit this level at 99.578. So potentially going to see some further risk off today, tomorrow. Watch to see if this reverses or flips to see how the market's going to shape up in the coming weeks in reaction to that. So yeah, seeing some things in the markets that are not obviously great to see. Want to see the signals in the coming days to see if that reverses or not. Otherwise, got some potential risk in the markets. And finally, just to check the VIX, so this is the volatility index of the stock market. How's it doing? This shows when something risk off is about to happen. Just basing at the lows really, so no signs of risk off when it comes to the VIX yet. But if you see this start to spike up, that again can lead to something in the world, whether it's the economies having a shake up, and that's going to of course lead to further risk off moves. So keep an eye on those charts. If you guys need an exchange to trade on, I have some links below on my video where I currently trade. You get some good rewards. You get 20% cash back on your trading fees, VIP1 account. So massive discount on all your trading. So you guys can make more profits. If you're a day trader or you're a scalper, you guys will know how much fees accumulate and hurt your profits at the end of the year. So check those links out, help support the channel, and I'll see you guys in the next one.